$2.3 billion.
In a single 24-hour window.
I just want you to let that number sit with you for a second. We're not talking about, meme coins or some wash trading NFT volume here.
Not at all.
We are talking about $2.3 billion worth of Bitcoin, moving in a way that, honestly, it gave me flashbacks to some of the darker days of the last cycle.
And it's not just the sheer volume that has everyone's notifications blowing up. It's the source.
Yeah.
That's the key.
Right.
If this were, say, a known exchange wallet just shuffling funds for cold storage, nobody would even blink. But this was a Satoshi-era entity. We're talking about a wallet that has been gathering digital dust for 14 years.
14 years. Just think about that. This wallet was dormant since the network was basically a science experiment. It survived Mt. Gox, the 2017 mania, the COVID crash, FTX, all of it, without flinching. And then suddenly, January 2026, the owner wakes up and decides, you know what, today's the day.
It definitely raises the blood pressure. And when you look at the broader market context right now, the timing, it feels incredibly deliberate.
Yeah.
We've got Bitcoin trading below that psychological $100,000 barrier, hovering in that nasty 92 to 94K range. Retail sentiment is already fragile.
Fragile is putting it politely. People are terrified. Tech stocks are wobbling. You've got the AI bubble narrative floating around again, and now this prehistoric whale splashes down.
It feels like the ultimate calm before the storm signal.
Exactly. So the big question we're tackling today is it this the signal to evacuate, or is it maybe the most elaborate bear trap we've ever seen?
That's the mission. We have to decode this. Is it a capitulation event or is it an accumulation opportunity? And to do that, we have to look at what the smart money is doing while everyone else is, panicking.
And we're also going to hand over the toolkit. We're not just going to tell you what happened. We're going to break down the specific free tools like Arkham, Glassnode, so you can actually track these whales yourself.
So you're not just waiting for the headlines.
Right. But we have to start with the event itself, the wake-up call.
So the specifics are really fascinating. The headline everywhere is 2.3 billion. But if you dig into the on-chain data from January 20th to the 25th, the entity actually moved closer to 40,000 Bitcoin total.
40,000.
Which at current market prices is roughly $4.7 billion.
4.7 billion. Okay, so play devil's advocate for me here.
Go on.
If I see that much Bitcoin moving from a wallet that hasn't touched a key in over a decade, my lizard brain just screams, dump.
Right.
I assume they're selling everything and, I don't know, buying an island.
That is the natural reaction. And honestly, some of that probably is being sold. But we have to look at the execution. This wasn't some clumsy fat finger market sell on Coinbase.
No way.
If you dump 40,000 BTC on the spot market, you crash the price instantly. You get terrible execution.
Oh, slippage would just eat you alive. You'd wipe out the order book.
Exactly. So what do? They used OTC desks, over-the-counter trading. Specifically, the on-chain forensics seemed to point to Galaxy Digital handling the flow.
And for those not trading at that institutional size, let's just clarify OTC. It's basically a private marketplace, right? Kind of like the dark pool of crypto.
That's a perfect way to put it.
You negotiate a price directly, and the trade happens off the public books, so it doesn't immediately tank the chart.
It's a strategic exit. It signals that this old money wants to cash out, or maybe rebalance, especially after we hit that $123,000 peak. But they're smart enough to do it quietly.
But even quietly, the blockchain is transparent. We see it happen, and that just messes with market psychology.
It does.
When the OGs, the people who are mining on a laptop, start selling, retail investors just assume the party is over.
It confirms their worst fears. It creates this narrative of, if the guys who know the most are getting out, why am I still holding the bag? And it becomes, well, a self-fulfilling prophecy.
Which brings us to the ugly part of the chart, the bear case. Because it's not just this one ancient whale, is it? We're seeing a lot of coins moving in the wrong direction.
Yeah, specifically onto exchanges. And that inflow data is, well, it's concerning. In just a 2-day window, Jan 20th and 21st, we saw 17,000 Bitcoin flow from private wallets onto exchanges.
And just to review the basics of exchange net flow, when coins move onto an exchange, it's usually to sell.
Right. You don't move them there for safekeeping. You move them there to liquidate. or maybe to use as collateral for shorts.
Precisely. And context is everything. If we rewind the tape to March 2025, which I know is a painful memory for a lot of traders,
I'm still recovering, thank you.
we saw a very, very similar pattern. Back then, Binance inflows hit $7.5 billion in a 30-day window. And what happened next?
Bitcoin just nosedived from $102,000 all the way down to $70,000.
It was a bloodbath. And you're seeing that same 7.5 billion number flashing again.
We are hitting that threshold again right now. And there's another metric from CryptoQuant that makes the bear case even heavier.
Oh, great.
For the first time since 2023, the network as a whole is realizing net losses.
Meaning the coins moving on-chain are being sold for less than they were bought for.
Yes. The market psychology has shifted. We went from profit-taking people selling to, buy a new car to loss realization. That usually indicates capitulation. People are selling because the pain is too high.
Or they're being forced to sell. Margin calls.
Exactly.
So if we play this out, massive inflows mirroring the March 2025 crash, people capitulating at a loss.
Right.
Where does that put the bottom?
Well, if the selling pressure doesn't let up, the technical analysts are eyeing a target zone of roughly $70,000 to $73,000. That's the danger zone.
That is a grim picture.
Okay.
And there's usually a but. When everyone is looking one way, the price hasn't collapsed to 70,000 yet. It's holding in the 90s. Why?
This is where the story gets complex. We're calling it the Great Absorption. Yes, 17,000 Bitcoin went onto exchanges. But on January 20th, in a single 4-hour window, nearly 19,700 Bitcoin flowed out.
Wait. So in the same time frame that people were panic depositing, someone else yanked almost 20,000 coins off the market.
Someone with very, very deep pockets. While that Satoshi-era entity was selling via OTC, we saw record-breaking ETF trading volume $19.6 billion.
So the ETFs and corporate treasuries are just acting like a giant sponge.
It's an institutional handoff. The exchange reserves, the total pile of Bitcoin sitting on exchanges available to buy, are actually at a 5-year low. We're sitting at around 2.4 million Bitcoin.
I have to push back a little, though. We always talk about institutional adoption like it's the holy grail. But doesn't this just mean the supply is getting centralized? If BlackRock and the ETFs are scooping everything up, isn't that a risk in itself?
It's a valid concern. You're trading decentralized distribution for centralized custody. But in terms of price action right now, it creates a supply shock. If reserves are low and these giants are buying billions a day, the price floor just keeps rising.
And we can actually see who is buying. This is one of my favorite metrics, smart money divergence.
It's one of the most reliable signals. We track different wallet sizes. Right now, the retail cohort, anyone with less than 1 Bitcoin is panic selling.
But the shark and dolphin cohorts?
The ones holding between 10 and 10,000 Bitcoin. The rich dentists, the family offices.
Right. What are they doing?
They bought 34,000 Bitcoin in the last 5 days.
That is a massive divergence. The little guy is puking their position at a loss, and the mid-tier smart money is backing up the truck.
And historically, whenever we see retail sell while the shark and dolphin cohort buys, it marks a local bottom. They're positioning for the bounce.
So we have a standoff. Garish inflows versus bullish absorption. Okay, for the traders listening, let's get into the specific numbers. Where are the lines in the sand?
The most critical number for resistance, the ceiling we need to break, is $98,300.
Why that number specifically? It seems so random.
It's not random at all. That is the short-term holder cost basis. It's the average purchase price for everyone who bought Bitcoin in the last 155 days.
So basically, anyone who bought in the last 5 months is currently underwater.
They are in the red. And human psychology is predictable. When the price gets back up to 98.3, those people see break even. They breathe a sigh of relief and they sell, just to get out without a loss.
The get me out of this trade line.
It creates a massive wall of sell pressure.
And on the downside, if this absorption fails, where's the floor?
The absolute line of the sand is 91,800. We've seen significant buy orders there. But, and this is a big warning, if 91.8 breaks, we could see a liquidation cascade targeting 85 to 88K.
And those are nasty. That's the domino effect of leveraged longs getting margin called.
And they can happen in minutes in this market.
Yeah. But it's interesting. While Bitcoin is fighting for its life, we are seeing some weird behavior in altcoins. You called this selective rotation.
Yeah, the whales are making very specific bets. Take Chainlink. The top 100 LNK whales accumulated about 16 million LNK, while the price was below $13,
Well, retail was ignoring it.
while retail was selling it. And Solana is showing a signal I think a lot of people misunderstand: backwardation in the futures market.
Okay, unpack that. Backwardation sounds like a medical condition.
Right. Normally, futures are higher than spot price. That's contango. Backwardation is the opposite. The futures price is lower than the current spot price. It's rare.
And what does it mean?
It means the market is screaming, I don't care about next month, I need this asset right now. It signals acute short-term stress, but also massive immediate demand.
So for Solana, there's a desperation for the token, which that's usually a precursor to a short squeeze, isn't it? A violent move up.
It often is. And even in Ethereum, we're seeing whales closing their shorts and opening longs, even though they're currently underwater on those longs. They're betting heavily on a reversal.
So smart money is picking its spots. But, and this is the segment that usually ruins the party, the macro. You found a quote, "When tech sneezes, Bitcoin catches pneumonia."
It's a vivid image, but it holds up. We saw this in late 2025. There was massive fear about the AI bubble popping. NVIDIA, the semis, they all took a hit. And because so many trading algos just bucket Bitcoin with risk-on tech.
Crypto got dragged down with it. It's that correlation problem. We want it to be digital gold, a safe haven, but right now it trades like a high beta tech stock.
That's the reality. And the Fed isn't helping. Powell has been surprisingly hawkish. The bond markets aren't pricing in rate cuts until June 2026 at the earliest.
That is a long time to wait for liquidity. Bitcoin is a liquidity junkie.
It loves cheap money. So right now, Bitcoin is fighting two battles: the internal on-chain war and the external pressure from the Fed and tech. For it to really run, it needs to decouple.
Okay, we've covered a massive amount of ground. Now let's talk about the how-to, the toolkit, because hearing us talk about whale inflows is fine, but seeing it yourself is better.
This is the most empowering part of crypto. The data is public. You just need to know where to look.
So let's run through the stack. If I want to know when a whale moves money before it hits the news, what's my first stop?
Whale alert. Simple, free on Twitter X. It's the siren. You see 2,000 BTC transferred from unknown wallet to Coinbase. That's your heads up.
But that just gives you the address. It doesn't tell you who it is.
That's step 2. Arkham Intelligence. This is your detective tool. You copy that address from Whale Alert, paste it into Arkham, and it de-anonymizes the blockchain. It might tell you, this is Coinbase Prime, or this is a known institutional whale.
And that distinction is everything.
Everything. Then, for the broader trends, like exchange net flow, you use Glassnode or CryptoQuant. They have free charts showing the red and green bars of money moving in and out.
And to find those shark and dolphin wallets, the smart money.
Dune Analytics and Nansen. Dune has community-built dashboards where you can just search smart money and see what the profitable wallets are buying in real time.
But you have a warning here in the notes about spoofing.
Yes. Super important. Do not trade off a single notification. Whales know you are watching. They'll often place a huge buy order to make you feel bullish and then cancel it right before it executes.
That fake out.
Total fake out.
Yeah.
That's why we look for confluence. One whale alert is noise. But if you see that alert and CryptoQuant shows negative net flow and the sharks are buying on Dune, well, that's a signal.
Confluence is key. Don't be aloof in the wind.
Exactly.
All right, let's wrap this up. We are at a pivotal moment. A 14-year-old whale wallet moving billions. Retail panic selling.
But on the other side, you have the great absorption. ETFs and corporate treasuries stepping in, buying that supply. And exchange reserves are at 5-year lows.
The market is clearing the decks. A transfer from weak hands to strong hands.
That's the verdict. The price action is scary, but the market structure suggests accumulation.
So here's the final thought I want to leave you with. We talked about smart money, buying the dip. The price is down, sure. But the activity suggests the big players are betting on a bounce.
So the question is, are you selling because the price is down? Or are you buying because the institutional demand is up?
If you're staring at the price, you're fearful.
Yeah.
If you're staring at the flows, you might be seeing the opportunity of the year.
Couldn't said it better myself.
Check the charts, use the tools, and don't get spoofed. Thanks for diving in with us.
Keep your eyes on the chain.